But I'm definitely going to be using this in my next little like daily clip. Alright, locked in. Okay, so I just found out I can do a 0.5 on this. It actually looks way better, I think, for like these little introduction clips. But anyways, this is just going to be a little video saying about price action yesterday. We had really good price action. I'm talking about GJ. GJ, it'll be the 3rd of December, and we had really good price action throughout the day, and I didn't end up taking a trade. I did see a trade that I could have entered, however, I just didn't. There was a lot of news and just certain little things in the chart which caused me not to take a trade, and I also avoided a trade last night during New York session that ended up, if I had taken it, it would have been a losing trade. So I'm going to jump in here. I'll show you exactly why I didn't take a trade yesterday, even though we had a massive movement. And yeah, hopefully this can help you boys see sort of what I'm looking for as to not take a trade, because I think that's one of the biggest parts of trading, is being able to identify being able to be strict with what sort of price action you want to be trading in, and just being strict with when you're not willing to take a trade. And so I'll jump in, I'll show you exactly why I didn't, and yeah, I mean, you'll see anyway. Peace. Alright guys, so this is what I've been looking at this morning. It's currently 11:45, so I'm probably going to jump off the charts very soon. If you want to see it, I actually just posted a video on what I'm looking for on market opens, and yeah, just what I'm looking for on market opens, confluences that I was looking to have as targets today, and what I was sort of predicting to happen in the markets. And yeah, so if you do want to see how I go about sort of my pre-market analysis, go check out that video. I'm going to start doing those daily as well, just so you guys can have a little bit of game, and yeah, maybe that'll help you guys with your trading. But I'll just open this up in a new chart for yesterday's price action. Right. So coming into the day, we were sitting well down here. So coming into the day, I was looking at this sort of fair value gap here, and I mean, we were in this very bearish movement, and we've sort of just been chopping around in this for a long time. Like, we've been in a very clear downtrend, and I said in another video at the start of this week that I'm open to taking longs this week, because I know that in the long run, like if you look on a weekly time frame, it's clear that we are overextended. And if you go into a daily as well, I mean, the weekly looks quite balanced, whereas if you go into a daily time frame, you can see that we are this big movement here. That's massive, and that's over the course of about a week and a half. And so I've sort of been marking out areas that I think we could potentially draw back to, which for me is this high and this fair value gap being a very strong confluence for a retracement, so that we can make our next big bearish movement. So yesterday, keeping that in mind, I was still looking for bearish moves, because we were sitting inside of this 4-hour bearish fair value gap, which is obviously going to lead me to thinking that. However, with this candlestick here, we closed above this fair value gap, completely invalidating it, and that was my first sort of poke, and made me think that we were going to go long for the day. So from there, I'm looking at these highs, and yeah, my confluences for the day were these highs up here, and obviously all of the sort of hourly highs in between. However, this movement here, we created a fair value gap, a bullish fair value gap, as well as invalidating this. So we have a confirmation confluence that we're going to go bullish, and we also have a continuation confluence. I'm looking at this thinking that this is a really strong price range for us, especially after you take into consideration that there's an hourly low, an hourly draw on liquidity. So market opens at 10 o'clock our time, and we didn't really see anything. We saw a move up and move down. However, as soon as we came into this 4-hour fair value gap, I was looking for entries, for longs, and I was taking them up to this high here and this high up here. Jesus, 170. This fucking lawnmower has been going around me for the last hour, just doing circles. I don't know what the fuck they're playing at. I'm trying to make a YouTube video of it. Fuck. So anyway. What the fuck are they doing? We have this 4-hour imbalance. Price draws back down into it. This is at 1 o'clock in the afternoon, which is not really an ideal time for me to be entering a trade. So scale into a 15-minute regardless, and you just automatically see that we have this really good bullish movement following. However, I'll chuck on the replay trading so you can get a bit of a better idea of what I was looking at. So as soon as this candlestick closed, I pretty much knew that we were going to go long. We'd invalidated this fair value gap as well as invalidating this fair value gap. We did have this one left, but because on the 5-minute time frame, price action was looking so clean. I mean, look at this. Absolutely beautiful. This would have been a good entry. However, not with my strategy. If you were looking for 5-minute entries, for sure, that would have been a great little position to be entering off of. For me, it's just not ideal. So I was looking for a 15-minute retrace, either into equilibrium or we didn't really have a breaker block or anything really. I was looking for either a fair value gap to be formed or equilibrium to be hit. And as seen, price just ripped. This was my potential entry here. So price rip took out our first area take profit that I was looking for. And the big turnoff for me, the reason I didn't take this fair value gap entry here was because we had already made a 75 pip movement to the upside. And for an Asian session, I know that we don't usually move more than sort of 100 pips, or you sort of make a big movement like that and then you just consolidate. It's very common through Asian sessions, especially with this pair. And for me, I was looking at this, I was literally sitting in the charts and I was debating whether or not I took it. And I just made the decision that because we'd already swept out this high time frame high and we'd already made such a strong movement that it just wasn't worth me putting my money into the market. And as seen, it sort of backfired and price ended up ripping for the rest of the day. And yeah, I had the wrong sort of thought process. I was wanting to catch a trade down inside of this 15-minute movement at the start. I could tell where price wanted to go for the day. I could tell what price wanted to do, but I held myself back because I think it's just because of market knowledge, and that is a very valuable thing. It saves you from a lot of losing trades if you can think like that. However, this time probably could have just pressed buy. So that was the trade that I missed yesterday, and the reason that I was sort of questionable about whether I should have entered that or not is because this is such a good movement, and the fact that we couldn't catch a trade anywhere in there is a bit disappointing, to be honest. Price has moved, swept out this low, and absolutely ripped 250 pips. So it would have been really nice to be able to catch an entry throughout there. But like I said, not ideal in my trading strategy. And because I've been burned by that so many times, I just held myself out of the market. And there was another little trade that I could have taken last night during the A New York session. So it's this movement here. Once again, sitting above these highs. And this is why I held myself back on this trade also. So market for New York opens 11 p.m. So on this candlestick here. And we had this big imbalance. We have this daily high up here that I'm sort of looking at as we could get a weekly retracement up to that. And we also had these imbalances in here, and I had marks probably there, and there, just at the starts and the ends of each fair value gap. So I'm scrolling down to a 5-minute time frame, and I saw this reaction out of the bullish fair value gap. And I was looking at this, sort of thinking, do I take a long off of this fair value gap? Stops would have been under there, and TPs I had about 1, 2, and then I think I had a third at that. And once again, held myself back because we were sitting really close to these highs. I couldn't have taken a take profit at that first hourly high. We had also swept out these highs just here, which was also, that's obviously confluence for me to be going short on. And yeah, held myself back again, and unlike the other one, this saved my ass from a losing trade. So yesterday, I didn't take any trades. I saw a couple of trades that I could have taken. However, market analysis and just market knowledge sort of held me back. Yeah, so I hope you boys get a little bit of value out of that and a bit of an insight as to why I am avoiding certain trades and how it can protect you, because I think this is such an important skill to have in these markets, especially with Forex, is being able to pull yourself back and sort of just stop yourself from taking a trade because market conditions aren't perfect, and because maybe you've already swept out a high, maybe you've already swept out a low, and or even little things like take profit one's already been hit. A lot of the time, market will react off of those points, especially in Forex, and it's just not. Yeah, I've found in my Forex trading, it's very good to be able to hold yourself back and hold yourself accountable, because otherwise you just get fucking burned in these markets. But anyways, those are the two trades that I was looking at yesterday, and they were the two trades that I didn't end up taking. So I hope you boys get some value from that. And yeah, thank you boys for watching. And yeah, there should be some more of these coming. Peace.